Good evening, everyone. On behalf of FCS Financial, I'd like to thank you for joining us tonight. My name is Wendy Hall, and I'm a team leader for the crop insurance team based out of the Harrisonville and Higginsville offices. I'm excited to have a team of experts here tonight to go over some changes and reminders for the crop insurance program in 2022. As we begin tonight, I would like to mention that there is no way we can cover all of the details about the crop insurance program in a brief meeting. Please contact any of our branch offices and our staff will get you in touch with a crop insurance agent who can answer your questions. I would now like to welcome Jacob Rogers. Jake is an assistant vice president on the crop insurance team out of our Maryville office. Jake will be explaining some of the current trends we are seeing in the crop insurance industry.
Thanks, Wendy. As she said, I'm Jake Rogers out of the Maryville office covering the northwest part of Missouri. So the first thing I'm going to talk about is the market swings. As I'm sure all of you know, the markets have been a roller coaster over the last several months, also shown on these charts. One thing to be thinking about when talking about these big market swings is what the spring price will come in at for crop insurance. Right now, we are averaging at $587 and $14.29. To put that in perspective, last year we were sitting at $458 and $11.87. With the markets averaging where they are, our spring crop insurance prices are going to come in higher than last year, which means premiums will be higher, but guarantees will also be up, which will help ensure the rising cost of inputs. As of this morning, the drought monitor for Missouri is already showing a lot of the state starting out dry for the year. Along the lines of Missouri weather, this can change quickly. An example, it was 67 degrees in Mound City on Monday and down to single digits yesterday evening. While Missouri weather is a roller coaster like the markets, it's definitely something to have on the radar when talking about crop insurance. The last thing I want to talk about is private products. Private products are becoming more and more popular on the farm and are usually purchased in addition to multi-peril coverage. First thing is crop hail. Crop hail policies cover much more than just hail. For example, many hail policies also cover against fire, vandalism, transportation, whether it be to first place of storage or first place of sale, and many other perks. An example of fire coverage would be if your combine burns up and burns your cornfield up. The multi-peril policy will not cover that where your crop hail policy will. With vandalism, if a bunch of kids go out and do donuts in your field and tear the crop up, the multi-peril will not cover that where your crop hail policy will. Crop hail policies can be purchased at any time. Make sure to check with your agent to see what the buying time is if there's a storm on the horizon. Next thing we'll talk about is wind. Wind coverage is also a popular product, especially up in my territory where the wind never stops blowing. Wind coverage is an extra endorsement added on to hail policies. One thing to talk with your agent is about wind versus green snap. Wind endorsement covers wind damage and green snap damage, where green snap endorsements do not cover wind damage. Green snap is where the stalk breaks at the node, preventing ears from forming, and wind damage is where ears are unrecoverable due to wind damage. The deadline to purchase wind coverage is June 15th. Another thing to talk about when talking about wind coverage is the extra harvest expense option. Extra harvest expense is an option to add on that will pay 8% of your liability for ears that are 12 inches or less from the ground or at a 20-degree angle to the ground. The next thing is replant. Replant endorsements are becoming much more popular. Many companies offer an extra replant endorsement that gives you more coverage if you were to have to replant. Many of these policies do not have the 2020 qualifier like multi-peril coverage does. Also, most replant options provide coverage ahead of the early plant date, where multi-peril policies lose replant coverage if you plant early. If you find yourself replanting often, this would be a policy to visit with your agent about. The last thing we'll talk about is revenue products. With the constant rise in input costs, farmers are always looking to add more coverage to their operation. Many companies offer extra revenue products that you can buy on top of your multi-peril. If you're interested in these, I would contact your agent soon, as most of these policies, if not all, have the sign-up deadline of March 15th. Thanks, Wendy.
Thank you, Jake. I've been to Maryville before, and you're right, the wind never stops blowing up there, and it always seems like it's freezing. On to our next topic for this evening is a trend I'm sure you have all heard a lot about: precision data. Evan Harbart, a precision technology specialist with Farmers Mutual Hail, is here to tell us how you can use the precision data you are already collecting on your crop insurance policy.
Thanks, Wendy. So as she just mentioned, I'm Evan Harbart. I work for Farmers Mutual Hail. I'm located out of Central Illinois. And tonight we'll be discussing what is precision farming. So precision farming is made up of three major components. You've got your globe on top of the cab, your monitor within your cab, and then your farm management software. So this equipment, most farmers have already purchased. They're using that for their auto steer. They might already be mapping their fields to do variable rate applications, whether that be fertilizer, planting, or fungicide, anything like that. So those are the three major components of precision farming. And then they can capture all that data, put it into their farm management software. And from there, they're able to make any agronomic decisions off of that they so choose. So how does crop insurance fit into precision? It uses the data farmers are already collecting. So you're already going through when you're planting, you're mapping. So you're recording all of this data, and it just gives you another avenue to be able to get a return on that precision equipment that you've invested in. So a lot of times when we talk to precision customers about wanting to do this, we've noticed that they've got a globe on their tractor, or when they're coming to report either acres or production, they're carrying an iPad or looking them up on their phone. That's a very good indication that somebody's already doing precision. They're just not probably doing all the steps they need to be able to report this data for crop insurance. And then it's also an electronic transfer. So this helps them save time and paperwork. So as the farmer's going along, say you finish planting late Saturday evening, you have to get an appointment set up for FSA before you can ever report your acres. Well, with precision, you don't have to do that. So say Sunday afternoon, you're sitting in your recliner, you pull up your farm management software on your phone or iPad or computer, you go through, you verify all your fields are there. Everything's displaying planted. You've got all your acres right there. With FMH, we have a policyholder center account for our precision customers. And from there, they can actually transfer that data directly to their agent. So once they verify everything's there, they click a button, they'll receive an email, and the agent will receive an email saying that that data has been transferred. So FMH Precision Crop Insurance Solutions, how can we get more out of the data that you're already collecting? So some of the major benefits to doing precision would be it's convenient. So as I mentioned previously, you're going through, you're already mapping all of this data so you can have it for your own agronomic decisions. It's also going to help you save money. It will help you get a return on your investment that you've purchased your precision equipment. And then it also helps you save money on your premium. So as you're going along and you're planting a field that FSA has called maybe, let's say 80 acres. And every year, year after year, when you map that and you plant it, you're seeing, I'm only planting 76 acres of this. Maybe that's due to some waterways that are going through the field that you're not planting, or there's tree lines around it, anything like that. So you're going to only pay premium on the acres that you're actually planting, not what FSA has. And then it's going to help you save time. You're not going to have to wait weeks on end before you can get your appointment set at FSA before you can get an acreage report. So as soon as you're finished planting, you can transfer that data. Your agent can then go into the map and assign that to the correct units and get you an acreage report. And then from there, if you've got like a replant claim, as soon as those acres attached to your policy, the adjuster can actually go ahead and work that claim. So if you're doing precision, you can get paid on your replant claim faster than if you were waiting to go through FSA and then get that information to your agent. So will it work for me? The answer is yes. If you're able to map this data and you're able to transfer that data from your monitor to either a farm management software, or if you're just pulling that off onto a thumb drive. At FMH, we are connected with the major farm management software brands. And then we also utilize Ag Leader SMS. So with that, we're able to take data from any color or type of machine. As I just said a little bit of, there are a couple equipment qualifications. So that would be, if you've got multiple planters, are they all capable of recording your planting data? And then if they're capable of that, are you able to get that data off of your monitor, either to a farm management software or to a thumb drive? And then for harvest, are you able to calibrate that machine and record that? And then also, are you able to export that data? So what's the farmer's role in precision? We're not going to change anything in your operation to be able to do precision than what you're already doing. So a precision candidate is somebody that is already doing this, and they already know within their monitor, they're going to be setting up their offsets and farm and field structures before they ever get to the field for planting. So if you're not doing pre-work, you're going to do rework. If you don't have that stuff done ahead of time, it just makes it more of a headache for everyone else. So if you're going through, you're going to want to make sure you've got your offsets set up correctly on how far your globe is from specific parts on the machine. And then, you know, obviously your planter size, same thing with your combine, your header size, everything like that. And then you're going to want to make sure you're recording that data while you're planting and harvesting. A big thing with that is, whenever you pull into the field, make sure you start that recording. And then as you're leaving the field, make sure you stop that recording. I see it very often come acreage reporting time. I'll pull the information into our mapping system, and you'll see 3 or 4 miles of the gravel road between fields are planted. So with that, you just want to make sure once you pull into that field, you're starting that recording, and when you're leaving, you're stopping that. And then with harvest, most of the time, the farmers that are already collecting this data for their agronomic decisions, they are already calibrating, but they're not recording that calibration. So RMA requires you to be calibrated once per year per crop within 3%, and then you have to provide record of this. So even if you've got a newer Deere combine that's got this active yield technology on it, you still have to go through and verify that weight is within 3% whenever you're comparing it to a scale source. And then you've got to provide that data to your agent, and from there they can get you an acreage report or a production report. So reporting with precision data. So how does it work? As I mentioned a little bit ago, the farmer is going through and they're recording all of this data in their monitors, and then either transferring it to a farm management software where that data is housed, or they're pulling that off onto a thumb drive. And then they're going to transmit that data to FMH. So they're going to do that through our secure connection within our policyholder center account. That will then transmit the data directly to our mapping system to where we can generate your reports from there. And then your FMH agent will go in to your map within our system, and they'll assign that data to the correct units to make sure it gets put on your policy correctly and the most accurate it can be. So question we hear all the time, is my data secure? The answer is yes. The farmer still owns all of their data. We never sell that data. It's not going to any third party to be processed. We do any data processing in-house, and then the farmer chooses who they're sharing that data with, and we're only using what we need for crop insurance. So on the planting side, the only information we're getting is the plant date, the crop that was planted, and how many acres were planted. We get those 3 same things when it comes to the harvest data, but we're also going to see the average moisture and the wet weight. And then with that, I know there's a lot of data that you can store in your farm management software, such as, you know, maybe your seeding rates or your fertilizer applications, anything like that. We don't see any of that information. We only get the attributes needed for crop insurance. And then how does it work? So The 3 documents you need to be considered full precision would be your seeding map, your wet weight map, and then your calibration report. These 3 documents can be used for any claim or audit or review that you might get. So in the spring, you're going to report your acres via precision technology. So we'll have your seeding map. That's how we will get your acres onto your policy. In the fall, as you're going through harvesting, you're going to make sure you're calibrating that machine within that 3% tolerance allowed by RMA. And then once you transmit that harvest data, we will then have your wet weight maps. And we can provide those forms to the farmer once we've finished that, so they can see all their yields, verify that those are correct. And then when you're doing your planting data in the spring, once you transmit that data, we get you an acreage report. We can also generate what we call an FSA summary report, and you can take that to the FSA office with you. And from there, it will break everything out by CLU. So then whenever you go to report your acres, you can see what crop was planted on what day on what CLU. And then a lot of times we hear, well, my FSA office, they don't necessarily want my precision acres. That's perfectly okay. Your FSA acres and your policy acres do not have to match. So you're kind of getting the best of both worlds in that scenario. So you're going to be paying premium on the acres you only plant, but then when it comes to FSA, you're still going to report all the acres that they have for you. So enhance and simplify insurance. So you're going to use your precision data that you're already collecting. As I mentioned just a little bit ago, that can go for your required crop reporting, your precision claims, and then any 3-year review or high dollar audits you might have.
Heaven, thank you for sharing your precision expertise with us tonight.
You're very welcome.
We're seeing producers use precision technology for most of our AIPs. If this is something that you're interested in and would like to try it out, please let your agent know. Living in Missouri, we are constantly seeing the trend of claims, unfortunately. Our next speaker, Tom Stevens, will address ways that you can prepare for an adjuster if you do have a claim. Tom is the claims supervisor for the state of Missouri with Crop Risk Services, and he is based out of Northwest Missouri.
Thank you, Wendy. We'll go ahead and get started here with the claim side of everything. Most of this is just going to be some friendly reminders of different things we have going on. It seems kind of crazy that we're just a few weeks away from the potential of replants coming in, but we just got finished up with harvest, and then gas was going on real quick after that, and everyone was trying to get dirt work and get ready for replants. So with the claim side, that will be the first thing that we're going to touch on today. We're going to start with some general replant reminders. So the first thing we're going to start with is the 2 different types of replants that we have. We have self-certified replants and non-self-certified replants. We've got 4 points just to kind of remember with replant claims altogether. And then in the next few slides, we'll break down more individually on the self-cert and the non-self-cert. But key thing with replants, and you're going to hear us harp on this in the next couple slides even more, is going to be the timeliness of everything. We're going to need those notice of losses, those claims turned in by the insured as soon as possible. So get a hold of your agent, get a hold of your adjuster. We need to have these in before the field has been replanted. This is a big thing that we do occasionally run into. We need to make sure that we get you guys everything that you have due when you do go to replant. So even if you're thinking about replanting, go ahead and get that notice of loss turned in and make sure you're getting that ready to go, and an adjuster will reach out to you. That being said, that acreage is going to need to be released. So an adjuster is going to have to contact you before that is replanted. With CRS, our company, we've got a 24-hour guideline to contact insureds. For the Missouri team, I've cut that down to 12. And most of the time it's a lot quicker than that. So with our team, timeliness is very important. We understand that you guys are going to be in the fields replanting. And so we make that a big priority to make sure that we get those released to get that taken care of. Next thing we want to touch on, Jake kind of mentioned the private product replants, but for the MPCI replants, we do have the 20-20 rule, which is going to be 20 acres or 20% of your unit. So those are some reminders to keep in mind for just all replant claims in general. And next we'll be moving on into self-certified replants. So for self-cert replants, the big thing to remember is it's got to be 100 acres or less. So if you think you're getting anywhere close to 100 acres, just be reaching out to your adjuster, let them know, and they can change that out in the field, whether it's a self-cert replant or a regular rated replant. So self-cert replant, you're going to have to still get that authorization from the adjuster before you start replanting. But the paperwork will be sent to you, whether it's through the postal service or through email, however is your preferred option. And the insured will be completing the paperwork and sending it back to the adjuster. It is a note here at the bottom that even if it is a self-cert replant, a field inspection may be conducted. More than likely, this will be towards the end after you get done replanting. But just know that a field inspection may still be conducted, but not on all of them. It's not likely. So again, with timeliness, a lot of the slow points of a self-cert replant that our team finds is getting that paperwork back. Occasionally it'll get lost in the mail or just, guys forget about it. But it's always good to get this turned in and submitted. We like to get you guys paid as fast as we can. And not just that, but the company also sets standards for getting claims closed out by certain dates. It's also nice to do it while it's fresh in your mind so you can get it done and it be over with and you can move on to whatever else you guys have going on your operation. So if you are getting to that threshold of it being over 100 acres, that is when we can turn it into a certified replant, which we will be talking more on the next slide. So for these regular rated replants, it's going to be 100 acres or more. The adjuster will need to do a field inspection. So this is going to consist of taking pictures, taking counts, getting maps, GPS and off anything that's been replanted if necessary, depending on the situation. Again, with these, we're going to need to have that authorization given before the field is replanted. And then the adjuster will fill out the necessary claim paperwork. Then he'll explain to you while you're signing off the different documents that you're signing and any other questions that you may have with your replant claim before you sign off. And that should close out the replant claim. So moving on, we're going to talk, this is one of the more important slides that we're going to touch on, and we're going to be spending a decent amount of time with this one. We get this question a lot. It just depends on which part of the state that this is coming to, but replants. So replant is going to be when you're going back to the same crop. So you planted corn, you need to replant, you're replanting corn. That is going to be a replant. If you're thinking of switching crops, going from corn to soybeans, that is going to be referred to as what we call a first crop, second crop. And the first thing an adjuster will be considering is if it's practical to replant by the basic provisions. We have an excerpt to the right about the basic provisions, and I'll get more into that in depth here in a little bit. But if it is deemed that it is not practical to replant, that adjuster will authorize you to take it to another use. And a thing to keep in mind here is it's going to turn into a harvest claim at this point. So we won't be able to close this out until the end of the year when we can get the rest of the production for that unit, the rest of your farm. And that's when we will be closing out that claim. So those are usually the claims that we hold on to the longest. We don't see a whole lot of them, but we do see some of them. So that begs the question of what is practical to replant. So here we have the definition at the very top. It's got to be customary to replant. So basically, the time that it's replanted, it still has to be fully mature by the end of insurance period date to be considered practical to replant. But if you move on, just because different areas are different, We can move on into point number 3 down towards the very bottom. So 10 days after the final plant date. So that 11th day into the late plant period is when we're going to be releasing that to go to another crop. So it kind of gets confusing. I know, especially with the way it's worded there, it can get very confusing. But the big thing to remember when you're replanting, if you're considering going to a second crop, be reaching out to your agent, reach out to your adjuster. We can talk you through it, explain your options to you, and you can pick the option that is best for your operation. Now on to the dreaded prevent plant. We do see these occasionally. Some years they're pretty bad. We do have a bad memory, 2018 or 19, I can't remember exactly it was, when all the levees on the Missouri and the Mississippi were breaking loose, but that was a hardship for a lot of people, a lot of farmers, and that was a very hard year for a lot of people, and it took a long time to get that cleaned up. So this slide, we're going to be talking about your intended acreage applicability. So this is going to be important to make sure that you stay eligible for a prevent plant payment if it comes through. So in this scenario at the top, we've got an insured that has not planted any crops and not received a prevent plant insurance guarantee in the 4 most recent crop years. They will be considered to have planted if your APH database contains actual planted acres. After that, we need to get that intended acreage report submitted by the sales closing date. And if you add acreage after the sales close date, we need that within 10 days of the acreage being added. Some more notes we have down here at the bottom is if you were eligible to file that intended acreage report the first crop year, you will also be eligible for the second year. And failure to report your intended acres could result in no eligible acres. So like I said, hopefully we won't be running into these types of claims, but if we do, we want to make sure you guys are due everything that you can get as far as prevent plant claims go. So next, we're going to be talking about the 1 in 4 rule. So in one of the 4 recent crop years, your acreage must be planted, insured, and harvested. And all this needs to be done in the same year. You can find this information in the basic provisions, and it doesn't have to be the crop you're claiming prevent plant on. So the example we have down below is 2021 crop year. Your corn was insured, planted, and harvested. And in 2022, you can claim prevent plant on soybeans. Also, the definition of harvest is found in the crop provisions. It's not necessarily just for grain. It could be for cutting silage. And in that case, you need to turn in a notice of loss. An adjuster would come out, appraise your corn, and get that in there. But silage will count as harvested. So that's a key thing to remember with the 1 in 4 qualifying rule. Some other documentation that may be asked of you going into the claim. Guys, the more information you can give us on these claims, the more likely they will slide through with flying colors. We can get them paid quicker and there won't be as many questions asked. But if we could get input receipts, so this is going to consist of, any gas that you put on, any other chemicals, seed receipts, anything that you have that shows intent you were intending to plant that field. We need to put those in and it helps out with the claim. Any lease and purchase agreements, we need those as well, along with any USDA documentation, prior year's schedule of insurance, and prior year's proof of losses. Any soil survey maps are great, especially if they show that your soil holds in moisture very well. That can be added to the claim, and any weather data. So we're going to be adding in PRISM data to all our prevent plant claims. It's a government website is where we pull our weather data, but if you have other supporting weather data that you can apply to your claim, add that in there. That'd be great to have in there as well to support it. And then we have at the last bullet point, any other supporting documentation. This could be, water running over bridges, road signs, just flooded out fields. Anything you want to add to your claim like that is always great to get in there to make sure it gets through the process a little bit quicker and make sure that you get everything that is due to you as far as your indemnity payment goes for prevent plant. Now moving on to harvest claims. So A big reminder in harvest claims, we do run into it, prior year crop still in the bin. If you have that situation come up, get a hold of your agent, get a hold of your adjuster. They'll come out and measure your production, and they'll let you know how they want you to proceed with the claim and how they want you to proceed with that year's crop, whether that be coming out, getting everything measured, etc. Another thing we run into is guys that aren't harvesting 100% of their insured acres. So this could be silage, or this could be, let's say you had a river get out on the bottom 10, 15 acres of your field. You've got a bunch of trash out there that you don't want to run your equipment through. If you're not going to harvest it, we need to know about it. You need to turn in a notice of loss, get a hold of your agent, your adjuster, and an adjuster will come out, appraise, document the damage. We need 100% of your acres to make sure that the claim is worked accurately. And this is probably one of the bigger things that we see during the year, especially with harvest claims. We're going to need 100% of your total production. So we're going to be working with settlement sheets. We can't work with tickets. We need settlement sheets from the elevator, and we need all shareholders. There's a lot of times we'll show up to the farm. We'll only have 1/3 or 2/3 of the grain. We won't have the shareholder settlement sheets. We'll have to make additional phone calls, and a lot of times it ends up in additional trips. So that will slow the claim process down. If you have 100% of your production, it's going to speed everything up. It's going to help us out, and we'll get things wrapped up a lot sooner. Next point we have is talking more about soft records. We try to avoid commingling grain across your policy as much as possible. Sometimes it can't be helped, but we do our best to make sure that we use soft records to break that out. That can be your combine data, your load logs, if you're keeping track of semis leaving the field. However you want to do it, it works, and we're more than willing to use it. Just make sure it's prepared and ready, organized, and that it's complete in its entirety. Another thing that's not on this list on that page I was going to bring up is feed records. Most of the time we prefer to measure feed out of a bin before you start feeding it. But if that's not possible, just keep track of your feed records, keep those organized neat, and keep those prepared and available once the adjuster gets to the farm. Moving on, this slide is going to be solely about selling grain. The biggest thing to remember is just make sure it's always sold under the name stated on the policy. That is going to be, they've got an example down below. You can kind of see and read through there at your own will. But if grain is not sold under the name on the policy, we need a transfer of rights, and it needs to be completed timely. If the grain is discovered to be sold under a different name at the time of loss, we're going to determine if the insured was entitled to the share reported. So the insured is going to need to supply written documentation as to why it was sold in someone else's name. He may be subjected to a lesser share if it's determined it was sold different to the crop share agreement. And if it's sold under a different name, we find that the insured had no share at the time of harvest. There's no transfer of coverage. The insured could potentially be entitled to no indemnity, and they still owe the premium and producer fees. So that's a big thing there, guys, to kind of remember. It kind of gets overlooked occasionally, but always remember to be selling that as you go through. And I believe this was my last slide. So I want to say thank you for the opportunity to present, and I hope you all have a great growing season and harvest going into 2022. And thank you very much.
Thank you for all those tips, Tom. That's great advice, but I think everyone here would agree. We hope that we don't have to use them for at least a year, maybe 2. All right, moving on, we'll now have Rachel Hudson. She is an assistant vice president out of our Hannibal office, and she's going to show us some important changes and reminders for the 2022 crop insurance year.
Thanks, Wendy. As she mentioned, I serve the northeast corner of Missouri for FCS Financial Crop Insurance, and I'm going to go over some of the updates for 2022 that we are going to see for the crop insurance program. As you can kind of see on this slide, the first thing that we're going to talk about is regarding prevent, plant, and cover crops. In the past, if a producer had filed prevent plant and then went on to plant cover crops on their ground, they basically had to leave it in place until November 1st. RMA has removed this date in order to be more friendly to producers who plant cover crops. Now, if you file a prevent plant claim and go onto a cover crop, producers have the option to go ahead and hay or graze a cover crop, or go ahead and cut for silage, haylage, or baleage. So again, just some options for producers in this scenario. As Tom mentioned, he talked a little bit about the 1 in 4 rule, but I'm going to go ahead and clarify some of the changes that we have seen in addition to what he mentioned earlier. As he said, part of that is being planted, harvested, and insured. They have changed to where NAP insurance will go ahead and meet your insurance requirement for this. So this provides a little more flexibility on this rule. Also, with the 1 in 4 rule regarding the annual regrowth of perennial crops. If you're a producer who typically has alfalfa as part of your rotation, this can be considered the planted portion of the planted, harvested, and insured. However, you still must carry insurance on that alfalfa in order to qualify for that 1 in 4 rule. Last but not least on this slide, if you're a producer who produces organic crops, there are options to allow insureds to request written certification. If that is something that affects you, be sure to just talk to your agent about that. Next up, we have the beginning farmer rancher and veteran farmer rancher. I want to talk a little bit about the benefits as well as some of the changes that we're going to be seeing for 2022. First off, I'm going to start with the veteran farmer rancher. They've changed that definition. In the past, with the spousal policy, both spouses had to qualify and had to have been a veteran. They have changed that to where only one of you has to qualify. So if your spouse qualifies for the veteran farmer rancher, the other one does not have to qualify. So it's a little bit more friendly to people who have served in the military. There's a lot of benefits for producers in these programs, and so I'm going to highlight a couple of those. If an individual has been involved for less than 5 years, whether it be livestock or crop production, excluding the years under the age of 18, or if you are enrolled in post-secondary education, or again, active duty in the military, you might be eligible for this program. Many times we see this with young individuals coming back to the family farm. However, there are other options to be sure. So just be sure and ask your agent about this if you think you qualify. Couple other benefits I want to highlight that we can take advantage of. If the producer has been involved in management decisions or physical labor of the operation, they have the option to utilize all of the producer yields. However, they also have the option to only use some of those yields. No matter which way they go about it, whether they use all of them or part of them, they must start at the most recent year and they can't have a break in continuity. Last but not least, little financial benefit for the BFR is these producers, if they qualify, will receive 10% additional premium subsidy, as well as having the $30 administrative fee waived on their premium. So again, added benefits. As you can see on the right-hand side, the last thing I want to kind of hit on is the new producer. This is something completely separate. And some of you may qualify even if you've been farming for 20 years. If you were to pick up ground in a new county that you have never produced in, you may qualify for new producers. So as long as you haven't produced that crop in the county for more than 2 years, you may potentially qualify. So again, just be sure to ask questions if you think you fit into those scenarios. Next up, we have what are our tax-based products. Whole farm is essentially a policy that we can have all commodities on the farm under one policy. They've added a change to that in 2022 and added what they're calling the micro farm. This allows for smaller producers who have a revenue of $100,000 or less to insure their operation. Since this is a tax-based product, obviously you will need to be able to provide taxes. For this product, you will have to have 3 years of taxes. So if you have questions about this and are going to contact an agent, be sure to have 3 years of taxes in order to help them service you. As Tom mentioned, in 2019, we dealt with breached levees with a flood. Cole and Holt counties in Missouri still have some breach levee statements. We've had a lot of questions about the fact of whether or not this ground is insurable. This ground is insurable, however, it will be at the highest risk rating. If you're in a scenario where you are affected by this breach levee statement and your ground hasn't flooded, you might talk with your agent about a written agreement. There are ways to reduce the risk rating to help kind of reduce your premium as well once that risk rating goes down. This is something that was actually just pushed out a couple weeks ago. The Pandemic Cover Crop Program. This was in effect for 2021. It's also rolled on into 2022. So if you are someone who plants cover crops, be sure to make sure that those are reported to FSA on a 578 by March 15th. You have the opportunity to receive up to $5 an acre based on share arrangement, and that will be a premium credit on your crop insurance bill. As we have mentioned, sales closing date is quickly approaching on March 15th. And if you look at this slide, these are some options that we have as crop insurance products. The top two, if we look at revenue protection and yield protection, is going to be what a majority of producers are signed up for their multi-peril. However, a lot of producers are looking for additional coverage for 2022. And so we've listed 3 different options that have been talked about in the last couple of years, and changes that we've seen. If you look to the right, we have margin protection, which is, again, it is a county-based product, but essentially it is protecting against an unexpected decrease in operating margins. This is something that this product has a sales closing date of September 30th. So we have already passed that for 2022. However, something to note, if you are signed up for margin protection, these other 2 products on the slide you cannot sign up for if you're already signed up for margin protection. The other 2 products are SCO, supplemental coverage option, and ECO, the enhanced coverage option. These again are 2 county-based options. So essentially, if the county as a whole has a loss, you could trigger a loss as well. However, in a scenario as an individual, if you have a loss and the county doesn't, you won't get paid on these products. Something to consider with supplemental coverage option, if you want to add this to your policy, you cannot have ARC elected at FSA. But again, these are just a few products that we want to highlight that they are out there and ways to add coverage to your policy. But again, not a one size fits all. So make sure you ask your agent about the products for your operation. Last but not least is the livestock products that we have out. I've spent a lot of time this past year writing livestock risk protection insurance. We've seen an uptick in interest, and a lot of that is attributed to the change in subsidy rate. Prior to 2020, there was a flat 13% subsidy rate with this product, and now we see anywhere from a 35 to a 55% subsidy based on your elected coverage level. In 2019, Missouri insured just under 5,000 head for livestock risk protection, and so far for 2022, Missouri already has around 40,000 head insured. So we've seen a large increase in numbers over the last couple years. A little bit about this product more specifically is this is basically it protects against a decline in price, whether it's on feeder cattle, slaughter cattle, or swine. However, this is not a death policy, so it does not insure against death. If you look below here, I want to highlight some things. A lot of our agents in the state have been writing more livestock insurance, and so FCS Financial has come out with a quoter on our website, and you can see the link below, and you can see what the options are after the market closes each day. So something for you to follow if you're interested in this product. And the last product that we have is PRF, or pasture, rangeland, and forage. Essentially what this does is protects your pasture and or hay ground. It ensures against a lack of rainfall, and it's based on a 12-mile by 12-mile grid. We did see a change in this for 2022, as the sales closing date is now December 1st. However, for 2022, that's already passed, but it will be in effect for 2023. So with that, that's all I have, Wendy.
Awesome. Thank you, Rachel. To close us out, I'm going to talk a little bit about what is possibly to come in the future. So PACE endorsement is a new endorsement for 2022 that's being offered in neighboring states to Missouri. It is an endorsement that can be added to your underlying policy, and it will provide additional coverage in the event that you utilize post-application nitrogen and are prevented from post-applying it due to wet weather conditions. This is a product that's available in Iowa, Illinois, Kansas, and Nebraska, so it could potentially be available in Missouri in the future. Farm Bill work has already started on the 2023 Farm Bill, and we expect to see an emphasis on conservation programs, as we've already seen a growing interest over the last few years. The graph on the screen is from Farm Policy News through the University of Illinois, and it shows Farm Bill conservation spending from 2002 to projected 2031 totals. So you'll notice that there is more and more money being invested into cover crops and conservation type programs. It is important to note that a cover crop payment initiative was part of the Build Back Better bill that did not pass. This would have allowed payments up to $25 an acre for planting cover crops. Since the last Farm Bill, considerable changes have been made with how cover crops have been utilized. So that's kind of something to watch for. Crop insurance is the #2 expenditure in the Farm Bill, and it's always welcomed bipartisan support. However, it seems like every year, every time these discussions come up, there are always suggested changes that could potentially harm the program because they see it as ways to cut funding for it. So we encourage you to be aware of what's going on in the process and to contact your local representatives to share your thoughts. The climate initiatives kind of go along with all of this conservation talk, but it was announced recently that USDA is investing $1 billion in partnerships to support climate smart farmers. We aren't exactly sure what this will look like yet, but RMA is already accommodating adaptive and innovative responses by farmers. Some of what RMA is doing includes making rates more responsive to changes by changing the rating time period to a 20-year rolling average versus the previous 35+ year. They are expanding new coverage to new counties to account for changing conditions, technology, and seed varieties. They are regularly reviewing key program dates such as early plant date, late plant date, etc. Multiple cover crop programs and incentives, which we have already mentioned. Quality loss option, which allows producers to maintain proper coverage in the face of extreme weather. And conservation compliance. If you aren't in compliance, you don't receive a subsidy. 99.5% of crop insurance producers comply with the conservation compliance rule. So these are just a fraction of the things that could possibly happen. And while we can speculate, we don't really know what to expect, which is pretty much par for the course with everything going on right now. So at this time, this concludes the content that we have to share with you guys. And I'd like to ask all the panelists to turn their cameras back on, and we will go through some questions that came through. Tom, I believe this one will be suited to you. If I have a cover crop on some ground where I am prevented from planting the intended crop due to rain, what happens?
So essentially, there won't be any changes as far as your prevent plant go. The big thing is just going to be, making sure you have an approved cover crop, check with your county extension office and make sure that it is at a cover plant or a cover crop rate. But as far as affecting your prevent plant, I shouldn't have any issues there.
Awesome, thank you. Tom, I believe this one is gonna be answered best by you as well. So when renting new land or purchasing new ground, is there anything we can do to be sure prevent plant coverage is available?
So yeah, that's going to fall in with making sure you get that intended acreage report turned in on time, as well as the 1 and 4 rule that we did mention. If you are acquiring new land, that is going to stay with the history of the land. So you don't start back over at year 1 when you buy that land. It's going to stay with the previous producer. So it is a good idea to check into that if you're thinking about buying a piece of ground that could typically be prevent plant or has in the past. It's a good idea to check into that possibly before you buy it and kind of see where it stands as far as that goes. But when it moves to a new producer, it's going to stick with that history of the field from the 1 and 4. So that's something to keep in consideration as far as that goes. Also, those lease and purchase agreements, that additional documentation that we may be asking, that's something else that'll help it go through a little bit smoother as well. I'm done now.
All right, great. Evan, can you hear us now? Okay, we'll go
I
back.
sure can.
Okay, awesome. We'll go back to that question on the weight calibration. Do you have to do that for every field?
No, you do not. RMA only requires you to calibrate once per year within 3% per crop. So with that, you do need to make sure that your last calibration that you're doing, so say you calibrate 5, 6, 7 times throughout your soybean harvest, you do need to make sure that even if your first 6 were within that 3%, that your very last calibration is also still within that 3%. Because if you were within that tolerance all harvest, but your very last calibration is outside of that, it will keep you out of being able to use that for your harvest data.
All right, Evan, I believe I have another question that is geared towards you. When precision data is linked to my crop insurance, what happens when I end up with skip because of a satellite connection or operator error?
So there's a couple different things we can do on that. If your data is still complete enough to be able to use that, we'll still go ahead and we'll use that going through for your acreage reporting. We can add in those little skips. It will bring you back to your FSA acres. We won't be able to use like a true precision number on that. But then if you do have multiple missing fields, we can use precision on what we've got, but on what we don't have, you'll just revert that to your FSA acres. So you're not locked in at any time. If you wanted to do precision and then you had multiple issues with your monitor throughout planting season, that's perfectly okay. You can still just report traditionally with your FSA acres.
All right, Evan, and one more question for you. Is there a best time of year to get set up to use precision for crop insurance?
You can get set up at any time through the year, but the best time would definitely be like right now, early spring before you've started planting. So then that way we can go ahead and we can get all of those connections established to be able to transfer that data once you've completed planting. So then that way it's not a mad dash trying to get those acres reported before July 15th.
Awesome. Thank you, Evan. We did have a question come in about if we had any updates on insuring hemp in 2022. Missouri is not approved under the hemp APH plan of insurance. That's no change from 2021. We don't know when that may potentially change. You may be able to insure hemp though under the whole farm policy that Rachel spoke about earlier. Definitely something to talk to your agent about. All right, we have got one more question. I believe this one will go towards Rachel. I have heard that PRF insurance may change for next year. Do you have any information on that?
Yeah, so RMA did conduct a study about PRF. So we are anticipating some changes to the PRF program. However, we don't have many details on that. If details are released, it's probably going to be around August or September. So anticipate those in early fall.
Great. All right, I believe those are all of the questions that we had come in. And in order to make sure you stay aware of everything happening at FCS Financial, please visit our website and sign up for email alerts, and make sure you follow us on Facebook, Twitter, and LinkedIn. And once again, thank you for your participation tonight. If there is anything that I or any of my team members can do for you, please do not hesitate to reach out. Thank you for joining us, everyone.